Good morning, everyone, and welcome to Morning Markets. My name's Chris Leyland. I'm Director of Investment Strategy here at True Potential. And what I want to do today is just really talk you through, what are the key discussion points that we're having as an investment team? How have asset prices moved overnight? How are they moving this morning? And just talk through, I guess, any economic data that we think is important. So firstly, let's start with equity markets, and they've opened strongly this morning with most regions showing positive returns. China, so the Shanghai Composite Index, added 1.6% overnight, and that's after a tough few trading sessions previously. But this means it's managed to move into positive territory with a 0.5% increase for the week. Why is this? It comes on the back of the World Bank saying China is set to lead the recovery of East Asian and Pacific economies this year. So growing by 8.1% in 2021, and that compares to 2.3% in 2020. If we look towards the US and we look towards the futures market, stock futures in the US rose markedly today, boosted by progress on vaccination rollouts in the country. So President Joe Biden has set a new goal of administering 200 million doses of the COVID-19 vaccine in his first 100 days in office. And that's obviously after he reached his prior goal ahead of schedule. Investors were also upbeat after weekly US jobless claims hit their lowest in a year, whilst Q4 US GDP growth was revised slightly higher to 4.3% from 4.1%. If we move over to the UK, and the FTSE 100s opened positively around 80 basis points up, so 0.8% up. And that's been helped by positive retail sales data. So retail sales in the United Kingdom jumped 2.1% month over month in February, following an 8.2% plunge in January as per our chart. If we dig deeper into this data, non-food stores provided the largest positive contribution, led by department stores and household goods stores, namely spending on home improvement and outdoor furniture ahead of the relaxation of coronavirus restrictions. Interestingly, the proportion spent online, with many of us being at home, compared to total retail sales increased to 36.1%, so that's the highest ever on record. Sticking with the UK, I'm sure we'll all be aware of this, another round of relaxation of restrictions will happen on Monday, and people will be allowed to meet outside with one other household or within the rule of 6. So to me, this illustrates the UK continuing its journey of recovery. If we move on to bond markets and sovereign bonds in the US, the yield on the benchmark 10-year Treasury note was higher at 1.65% on Friday, after a weak 7-year auction the day before that saw demand improving from last month, but sliding below the recent auction average. Earlier in the week, both the 2-year and 5-year auctions saw solid demand, while a sale of benchmark 10-year notes earlier in the month drew solid international demand. As I'm sure we'll all know, yields have been on an upward trajectory since August, but the jump accelerated from mid-January due to coronavirus vaccination programs and further fiscal stimulus support, leading to prospects of a stronger recovery. Jerome Powell, the Federal Reserve Chairman, showed no concern over the recent rise in bond yields. And just finally, just looking out to today, the European Council continue their discussion around vaccine rollout in the region, with fresh lockdowns highlighting the importance of a speedy vaccination program. We have a raft of US data out, including inflation, which is expected to stay below the Federal Reserve's 2% target. Okay, that's everything from me. I hope you enjoyed my summary today, and I hope you enjoy the weekend, and we look forward to speaking to you next week. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.